Now, Matt, tell us a little bit. Now, if I want to buy a second home, do I have to put 50% down? Do I have to put 20% down? How does financing for a second home work? Can you maybe touch base on that a little bit?
Yeah, well, first I want to touch base on it. If you're looking for a primary residence, there are a number of options as far as the mortgage programs you're going to look at. But if we're strictly
Mm-hmm.
second homes, you're really limited to just a handful of programs. And primarily, it's going to be a conventional mortgage, which conveniently is most likely going to give you the best terms regardless. And you can ask any of the agents on this call, when push comes to shove, all else equal, a conventional mortgage pre-approval is going to look better than a government-sponsored program. There is a common myth out there that the 20% down or is the absolute minimum, and that's not the case. For a second home, you can go 10% down with a conventional mortgage. And with the way rates are right now on a conventional mortgage, you're going to see, and I like to speak in generalities, not specifically savings, but if you're going to talk to any banker, you're going to see, as of right now, rates probably varying between 3 1/8 and 3.5% on a 30-year fix. And if you're able to borrow money with that low of a rate, it's worth exploring that option of doing 90% down. You have the 20%, you do avoid mortgage insurance, but the mortgage insurance rates these days are very, very reasonable as well. So
Okay, well, that's really great. And then quickly, I wanted to touch base on, and we're not here about skirting the law in any way, shape, or form, but how would you apply for a home as a primary mortgage? Let's say somebody rents in this, and this is another micro trend I'm seeing. People are renting in the city. This is my 9 to 5 pad, Monday through Friday, but my home is upstate. How can I claim that as a primary? Do I have to be there over 6 months or 6 months in one day, or how does the banks look at that as a primary residence?
Very interesting, because it's one of the questions on the application is, do you intend to occupy this property as your primary residence? And sometimes I have people that they draw a blank on that. They're not sure. And that is kind of a gray area, especially as Larry had alluded to. People are working remotely now, and you have to spend time in this getaway up here. Why not spend more of your time up here? So it's very interesting. The reactions that I see from people when I ask that question is they're not entirely sure. And from the bank's perspective, there's not a huge difference as far as the costs between a primary residence and a secondary residence. Really, what we're taking a look at is going from one housing payment to 2 housing payments. So you have to consider, take into consideration both of those housing payments. If you plan on collecting income on the second home up here, that opens up a can of worms on existing investment property. And at that point, there are down payment requirements of 25%, and the interest rates are a little bit higher. So it's a little trickier when you're dealing possible investment, but primary to secondary, it's really just a matter of 1 and 2 housing payments.
Understood. And what is kind of a rule of thumb of gross income to housing payment ratio that you guys look at?
Conventional and most programs, it's going to be 50% of your income. So if you're making, you can't be spending more than half of your income towards potentially 1 housing payment, now 2 housing payments, and then all other debts that you're paying, whether that be a car loan, any of the credit cards, the minimum balances, those show up on your credit report. All those are taken into consideration when qualifying. And if all those numbers don't add up to half of your income, you might have a problem with qualifying from a monthly.
Okay. No, that's something to take into consideration on that, and I appreciate your candidness with that.